Hey guys, a very warm welcome back. So we're into the next part of this video talking about top trading tips. If you haven't checked out the previous videos, go and check them out. Some good tips and bits and pieces in there. Okay, so the next one I want to mention is if you're trading, don't trade unless you really love it. Now, why would I be saying that? Okay, so don't trade unless you really, and I mean really love it. Now, why am I saying that? Because, listen, this is not for entertainment. Don't confuse what I'm saying here. This is not gambling. We're not messing around. It's a serious business, regardless if you're doing this part-time, full-time, whatever it may be. At the end of the day, it's your own money you're putting on the line. So you want to give it the best possible shot you can. And what I mean by this is, this business is so intensive. It's such a lot of cognitive load on you when you're making decisions. There can be an emotional roller coaster with your losses and your gains and your successes and your frustrations, and and getting angry at things sometimes, all these emotional swings that you have. If you don't really love the whole process, the whole analysis, the whole placing of trades, the whole losing and improving and the growth aspect of it, it's not for you, because you have to be able to put in the time and the effort. And that doesn't necessarily just mean the time you're spending in a trade. It's the kind of self-improvement that comes with it. It's analysis of the market. It's looking at what trades you're going to take, expanding your playbook, looking at different setups, all those kind of things. So my advice, and I've heard this from other guys as well, is listen, if you don't absolutely love the financial markets, then stay clear of trading. And it's a good question to ask yourself. I've spoken to a guy literally a few months ago, and he'd started out trading and he traded a bit and he'd made a little bit of money, and he said, you know what, I'm just not really that into it. And I thought, that's so self-aware. He's made a bit of money, he's just recognized it's not for him, he doesn't enjoy it that much, and he realizes it's a big journey to go on. So more kudos to him. So if you're in that position, it's a good time to sort of ask yourself if you really want to be doing it. And if the answer is yes, great, go for it, go flat out at it. But if there's a doubt there, then it may be time to sort of think, so maybe I can do something else. All right, so the other thing, I'm talking a little bit more about strategy and approach to the market, is to become a specialist. Now, I touched on this a while ago, because what I mean by that is, are you going to become, there's two types of specialists in my mind. The first one is that you become a specialist with a certain style of trading. So what do I mean by that? So in other words, you're a momentum trader. You like to trade expansion, volatility expansion, momentum. You're buying pullbacks, you may be buying breakouts after catalysts, that kind of thing. So you become a specialist in that particular niche, and then you look for markets that fit that. So perhaps you like to trade things after earnings, smaller cap stocks or whatever it may be after earnings, good earnings. So you scan for those and get involved in those, or maybe even broader than that. It's literally looking for volatility expansion. So you're constantly scanning commodities, currency pairs, indices, stocks, all that for a specific pattern or setup that you're quite good at. So you become a specialist in that aspect. The other way of becoming a specialist, so I'm going to just put one here, is setup specialist, and the other way of looking at it is to become a market specialist. Now, don't confuse specialist with the New York Stock Exchange specialist, the actual specialist. I'm talking about specializing in a specific type of trading. So setup is one. The other one is market. Now, what do I mean by that? Or a basket of markets, or a specific group of markets. One thing is becoming a setup specialist, so you're looking for a specific price pattern across a broad selection of markets. Yes, you might have a group that's a little bit narrower than a massive library, but still it's that setup you're looking for. Number two is a market specialist. So you may well just become a complete specialist in trading a Dow and DAX, for example, understanding the nuances of how they go, whether you're swing trading, whether you're day trading. Perhaps you have the basket of 5 tech stocks in the US, some of the big guys out there like Google, Netflix, Facebook, those kind of things, and you understand how they operate, how they trade, and you're going to just become a specialist in them, just trade them. Maybe UK stock, maybe you look to trade the insurers, the miners, utilities, whatever it may be. The point is you get to know that group of stocks or that currency selection or that indice selection, whatever it may be, and you trade a variety of setups on those different markets. But because you know the markets, or you try to learn the markets, that's the point of becoming a specialist. You know the little nuances, how they're behaving, if it's behaving unusually, whatever, and then you kind of employ the right setup for the job at the time. So, that's something to consider. I always think that however you're approaching it, you should become a specialist in something, whether that is the setup or whether it is the market, rather than trying to be a jack of all trades, because that becomes challenging. If you're trying to trade every single market and you're looking for every single setup in every single market, you don't narrow your focus and you can never become really exceptional. And to be honest, you have to become exceptional to make money overall, because we're competing against some of the best in the world, guys. No matter what level you're trading at, small account, large account, swing trading, day trading, CFD, spread betting, futures, stocks, we're competing against the best in the world. So we have to at least give ourselves a fighting chance. What's my preference of those two? I think it depends on the conditions at the time. If you're in a period where there's high volatility, for example, across the global indices, then you can quite easily become a specialist in, say, DAX, Dow, trading the open on the DAX or the open on the Dow, or FTSE DAX or something like that, and then swing trade and day trade those. Or perhaps, if there's something going on in Japan at the moment, the yen is very active, you can become a specialist in that. So I think you don't have to be stubborn and stick with this for the rest of your life, but you kind of put all your effort into one specific thing. If things are generally kind of quiet on a broad market sense, then becoming a setup specialist is not a bad idea, because what that allows you to do then is pick out normally individual stocks. So let's say we've gone on the example of momentum. You're looking for stocks that are gapping on news, and then you're scanning for those pre-market, then you're getting involved in those, whether you're positioning yourself for a position trade or whether you're day trading those, it doesn't matter. The point is you're kind of looking for that specific setup. Even something as simple as stocks are at 52-week highs with a big short flow, or even something like indices that are breaking down after being up for whatever. I can go on forever about a broad scanning strategy, but that's the point of scanning, and then you're trading based on that scan. Okay, so switching gears a little bit here. I'm just going from the kind of list I've got in front of me, and this is know when to switch off. So what do I mean by that? Well, listen, the markets are open 24/5. Okay, obviously the stock market isn't, but futures trade overnight, currencies trade overnight, some commodities trade overnight. You've got this broad, and in fact, stocks, you can trade stocks around the world. You can trade stocks in Asia, US. If you really wanted to, you could be trading 24/5. But the point is, and I've learned this the hard way, is don't let it rule your life, because you become so embroiled in the aspect of trading that you forget about the broader things that are around. You don't have time to recharge. And I know there's a fine line between hustling and doing the right thing and working hard and then taking time off to recharge. I appreciate that, and that's different for a lot of people. Some people can work harder than others, and I think maybe hard is the wrong word to use, but some people can work longer than others and still be at a decent level. Some people need time to refresh. Don't think it matters. At the end of the day, guys, one or two good trades, if you're swing trading, can make up your quarter. The same with day trading. You can have a couple of good days, and that is going to really just blitz out your month because you're just not really in tune with it. So, the beauty of trading is there's no relationship to how much time you're putting in, as in, clicking trading. It's more a case of picking and being rewarded for making the right decisions. So you don't have to be ingrained in the market all the time. I appreciate if you're a day trader, you're probably going to want to be watching the market, but if you're day trading, why not restrict it to when things are more volatile or more useful for you, or your market that you're tuned with is hitting certain levels or something, to give you that downtime so you're not kind of wasting energy. And I've mentioned this quite a few times before, and this is something that, as I said before, I've made the mistake of doing flat out for years, just burning out, thinking actually you need to, if you're going to continue doing this for the next 5 or 6 years, you need to be able to take the time off. And I think it's the same if you're swing trading as well. You know, it's very easy to fall into the trap of checking stuff on your phone all the time, logging in, what's going on, what's my portfolio doing. Okay, investing, maybe not so much, but we're talking about trading here. Then having that time and specifically earmarking it out in your calendar as well, saying, listen, I'm not going to do this, and planning it out. So anyway, I could go on about that, but you kind of get the idea from that. Anyway, what we'll do now, we'll go to the next video. I'm going to talk more about dwelling on mistakes, other little bits and pieces, great little tips. I like these. I hope you like these too. If you like this kind of video, hit like. If you want to see more of this in the future, subscribe. See you in the next video, guys.